Welcome. We appreciate you taking the time to be part of this presentation for the Portage County Financial Wellness Program. Who would have thought a year ago that we would be doing this remotely this year? But there's one advantage to that, actually. You can use this recording as a resource. So it's my intention to try to give you as much information that I can that will enable you to successfully navigate the home purchase process and the home buying process, home financing process, I should say. My name is Mark Chuey. I work as a mortgage loan officer for Cortland Bank, and we're happy to be doing this presentation, and again, I hope you find it useful. I've set this presentation up in a series of questions that I will answer from a mortgage lender's perspective to give you the information I feel that will help you get through the home buying process and the home financing process. The first question that I think everybody should ask, whether you're a first-time home buyer or buying a home for the second time or buying a home for a third time, isn't, can I be approved for a loan? What's my credit? How do I go about this? But the first question should be, should I buy a home now? If you feel that within the next 5 years you may have to relocate for work, or there's some event that you foresee or feel that could come to be that would cause you to move, then it's probably better to put it on hold. Real estate prices fluctuate quite a bit. If you can handle the stress, frankly, of real estate prices going down, they also go up, as well as the maintenance costs associated with a home. And you've answered the question, should I buy a home now? And you feel that you should, then by all means you should. The benefits of owning a home far outweigh renting. There's no question about it. The second question you should ask is, can I afford a home? Not can I be approved or how much of a mortgage can I get, but from a budget standpoint, how much of a mortgage can I afford? There's a real simple calculation that you can do that will give you that information, and I'll show you what that is. Let's assume that your gross monthly income is $3,000 per month. That's before taxes, before expenses of any type that would be reflected on your pay stub. You want to take 43% of that. 43% of $3,000 is $1,290. Let's assume that you have a car payment of $350 a month. Let's assume that you have a credit card of $75 and another credit card of $65. That leaves you with $800 to allocate towards a mortgage payment. How much of a house can you buy for an $800 a month payment? Again, let's assume that your income is $3,000 per month. 43% of that is the maximum that a mortgage lender will take relative to your gross income to account for all debt, car loan, student loan, credit card payments, what have you. $1,290 less your car, less a minimum payment on a credit card, less another credit card, leaves you with $800. That equates to a mortgage amount of approximately $115,000. So that will give you an idea as to how to calculate If you don't have a financial calculator, there are a lot of financial calculators online. Probably the easiest one to use, I think for sure, is the one that Zillow has. And to access that, you want to go to Zillow.com/mortgage hyphen calculator. Zillow.com/mortgage hyphen calculator. If you took this $800 and plugged that into that calculator, you're going to come up with a loan amount of approximately $115,000. At this point, you know how much of a mortgage realistically you could afford, and you want to work that into your budget. A budget would be for all monthly debt expenses plus utilities, food, gas, whatever you may have. You could probably spend all day talking about budgets. The best way to comprise a budget, to create a budget, would be to contact a HUD certified counselor. They are trained specifically in budgeting, credit counseling, and home buying counseling. Regardless of where you live, I'm sure there's a HUD counselor nearby. So how do you find one? You want to go to HUD.gov. HUD.gov. At the top right of that web page is going to be a tab, Resources. Click on Resources, and then from there you will see Find a Homebuyer Counselor. Plug in your zip code, hit Submit, and you're going to get probably 3 or 4 or 5 HUD counselors that are in your area. The service is free. They will help you create a budget. They'll help you with any credit issues that you feel you have, and it's a very, very, very valuable service. So you've answered the question. You want to buy a home. You have an idea as to how much a mortgage you can afford, and you want to go to the next step. The next step should be to think about getting pre-approved for a home loan. Getting pre-approved involves meeting with a lender, submitting specific documentation, and having the lender analyze that information and respond to you with some indication that yes, you should be able to qualify for a home loan. But before you do that, you should be familiar with some common terms in language that you're going to hear a lot of at this point in the process. So let's go through a few. The first is obviously mortgage. What is a mortgage? A mortgage is a term that simply means pledge. Someone is pledging something in exchange for something else. In the case of a mortgage, what you're doing is pledging property in exchange for the right to make payments and to use that property. The bank holds the mortgage, and you make the payments, obviously, to the bank. Income. You want to be very familiar with what your income is. If you're paid hourly, if you're paid salary, if you're self-employed. If you are self-employed, how do you structure your business? Do you receive a 1099 or W-2? You want to be aware of your income situation, so when the lender asks you, you'll be able to tell specifically what it is, and they will be able to tell you what documentation that they need. You want to be very familiar with your employment history. If you've changed jobs a lot in the past 2 years, that typically is not an issue. But you want to be able to very clearly and very accurately go back in your job history at least 2 years, if not 3 years. Debt to income ratio. The lender will calculate that for you. This is a basic calculation that we just went over, but it's not all encompassing. But you want to be aware of what a debt to income calculation is. A debt to income calculation takes your monthly debt plus the mortgage relative to your calculated income, and it tells the lender in a percentage point if you're close to what the maximum is, and more specifically, do you have the ability to repay based on that debt to income ratio. Credit score. Credit scores are something that has been given a lot of attention lately, specifically with companies such as Credit Karma and Experian offering credit services. If you're not using those, you should. It's good to be aware of what your credit score is. Down payment. Most loans require some type of down payment. The down payment is calculated as a percentage of the purchase price. Conventional loan versus government insured loan. There are two types of mortgage loans. There's a conventional loan, and everything else is pretty much government insured. We'll go over those two types here in a little bit. Assets. Checking accounts, savings accounts, 401k, stocks, bonds, mutual funds, liquid assets. Assets within a mortgage loan application does not mean cars, motorcycles, equipment, tools, furniture, clothes, things like that. We're talking about liquid assets that can be turned to cash very, very, very quickly. Debt and liabilities, car payments, student loans, credit cards. Appraisal. A bank will order an appraisal on the home at some point in the process. The appraisal determines market value. Another term, home inspection. A home inspection is different from the appraisal. The home inspection will tell you what type of condition the home is in. A home inspection will look at all the mechanical systems, the heat, the electric, the roof, the plumbing, so on and so forth. An appraiser will not look at those specific mechanical systems. The appraiser is going to assume that all those systems are working in an average condition unless he or she sees something differently. Earnest deposit. At the time you find a home and submit an offer, you're going to be required to give some type of upfront deposit, typically called earnest money. Any amount you give is part of your down payment and credited to you at closing. Realtor. There are two types of realtors, listing agent and selling agent. A realtor can do both. A realtor can list a home and sell a home. And you have a for sale by owner transaction as well. For sale by owner transaction is just that. A homeowner is selling their home without the use of a realtor. Prior to getting pre-approved, there are 4 things you should be more aware of and try to research before you sit down and speak with your lender. We mentioned credit a little bit and the credit apps that are available now. You should take advantage of those and try to get a good understanding as to what your credit history is. Are there things on there that you're unaware of? Are there items there that are derogatory? What is your credit score? Assets. You want to have a good understanding as to how much money realistically you're going to have available to use in purchasing a home. Income. You should do a quick calculation of your income. You should understand very clearly what your hourly pay is, if that's the case, what your salary is, if that's the case. If you're self-employed, you should look at the bottom line on your tax returns, your net income. What is your net income? There is specific documentation that you want to gather ahead of time before you call a lender and make an appointment. You want to get together 2 pay stubs, 2 recent pay stubs, 2 years of tax returns, 2 years of W-2 forms, and 2 months bank statements. If you were to meet with your lender and walk into his or her office with this information already together, I can assure you that you're going to move through this process very, very quickly and get an answer quicker than most. One thing you also want to consider, if you have student loans are a big issue now, and rightfully so. But it's important before you meet with your lender that you review the student loans that you have, especially if you feel you have large outstanding balances on student loans. You would want to make sure that your student loans are categorized in either one of two ways. They're categorized under the income-based repayment plan, which is also called IBR, or they're in deferment for at least 12 months. The loan programs that are available to most take into account student loan payments, and if the student loan payment is not on an income-based repayment, or if it's not deferred for at least 12 months, the mortgage lender has to take a percentage of the balance and use that as a monthly payment. If you have large outstanding balances, let's say you have a student loan, $60,000, a mortgage lender in most cases is required to take 1% times that as a monthly payment. So that would be a $600 payment that probably you're not counting on. So again, you want to make sure your student loans are either set up as an income-based repayment, IBR, or they're deferred for 12 months at least. If you're not sure, look at your student loan statements, and if you're still not sure, contact the student loan servicer. But almost all student loan servicing websites will have links specifically to the income-based repayment option and the deferment option. So you've answered the question. You want to buy a home. You have all your documentation together. You're familiar with the terms associated with a mortgage loan application, and you've contacted the lender to make an appointment to get pre-approved. The mortgage lender is going to explain to you different loan programs. Loan programs are broken down based on down payment, credit score, and in some cases, debt to income. There are two types of mortgage loan programs. There's conventional and government insured. Conventional means anything other than government insured. The government insured loans are the VA loans for veterans, the FHA loan, Federal Housing Administration, which is a loan program commonly used by first-time homebuyers. USDA, U.S. Department of Agriculture, has their own loan program, and it typically does not have a down payment, but is more specific for rural areas. Those three are government-insured loan programs. Conventional is privately insured. The mortgage lender will explain to you those programs and which program he or she feels is going to be best for you. But at the very least, you want to be aware of those programs and be able to make sure in talking with your mortgage lender that your personal situation, specifically if you have student loans, that you are going to be in the right loan program. You also want to ask about down payment assistance programs. The mortgage lender may bring this up, but regardless, you should be aware that there are down payment assistance programs available. How do you find where those are? You want to start at the local level, at the municipal level. Then you want to go out to the county level, then state, then federal. Each of those levels of government, from time to time, have their own down payment assistance programs. It would be easy to find out simply by doing a Google search, down payment assistance, Portage County, and see what comes up. Likewise for state, likewise for federal. Every state has a housing finance agency. The state of Ohio, Ohio Housing Finance Agency, has their own down payment assistance program as well. From time to time, there are federal down payment assistance programs administered through the Federal Home Loan Bank. But again, to find out, Simply do a Google search, down payment assistance, state of Ohio, down payment assistance, federal, state, down payment assistance, municipal, city of Portage, county of Portage, city of Akron, what have you. Typically you're going to find that information that way, but at the very least ask your mortgage lender what down payment assistance programs are available to you at that time. All down payment assistance programs are not alike. Some are compatible with most loan programs, some are not. So again, it's important to ask your lender which are available and which down payment assistance programs are going to work best for you, specific to the loan program that you and your mortgage lender decide you should be in. So let's say that you're pre-approved and now you are out actively looking at homes. You're working with a realtor and you find a home, you submit an offer. There is a document called a purchase agreement. A purchase agreement is a written agreement to purchase a home. A couple things important about a purchase agreement that you need to keep in mind. First and foremost, it's a legal document. Once you sign it, you're obligating yourself in almost every aspect to follow through and purchase that home. There are certain things within the purchase agreement that you may ask for. Example, you may want to get a home inspection. It's strongly encouraged to get a home inspection, but the purchase agreement will ask you, are you or are you not going to get a home inspection? If the home has a well and septic, as an example, the purchase agreement will ask you, will there be a septic inspection? Will there be a well inspection? Also, you can ask the seller of the property to pay part or all of your closing costs. Again, it's important to work with a realtor. Your realtor will advise you as to this and how much you can ask the seller to pay. If you can ask the seller to pay part of your closing costs, you should. It will definitely save you money. Purchasing a home as for sale by owner is much more difficult. It's not for everybody, but if you do find a home that is for sale by owner, you should proceed very, very carefully, and at the very least still have a realtor working with you on your side to make sure that the documents you are signing are fully explained and you understand completely what it is you're signing and what those documents mean in terms of following through on the purchase of the home. There are a lot of homes that are available for sale by owner, but again, you want to be very, very careful, but at the very least, have a realtor represent you in that transaction. Once you find a home, you submit an offer, your lender will take it over from there, and you're going to go through what's called a loan closing process. The loan closing can be summed up very easily. It's when the title to the property transfers from the current owner to you. Title work will be done. Title work is an examination of the title over time to make sure that the title is clear and it does not have any defects, as we say, or anything that would keep it from transferring from the current owner to you. There's going to be a survey that will be completed as well to make sure that the property lines do not encroach on a neighbor's property or a neighbor's property does not encroach on yours. At the time of closing, you're going to be asked to sign specific paperwork. You'll sign the mortgage, which is pledging the collateral of the property in favor of the loan. You're going to sign what's called a note. A note is a promise or obligation to repay a certain dollar amount, and that dollar amount is your mortgage loan. And at some point, you're going to have to transfer funds from yourself to the title company in the amount of the down payment that you've worked out relative to the loan program. That can be done with an official check, a bank check, but more commonly, that transfer of money at closing from you to the title company for your down payment is done with a wire transfer. So at this point, you're on your way. you've found a home, you've worked with a realtor, you've submitted an offer, you've gone through the closing process, and you received your first month's payment. It's time to make a payment. Payments are typically due on the 1st of the month, payable through the 15th. One thing about mortgage payments that's really critical is that most mortgage loans are transferred from the lender you obtain the loan from to what's called to what is called a loan servicer. That doesn't mean your loan is bad. It's just a fact with mortgage banking today. The important thing with your loan being transferred is that you want to make sure when you receive that transfer notice in the mail that you confirm it. More than likely, almost always, it's going to be valid, but there is a lot of fraud dealing with mortgage payments and mortgage servicing. Example, someone receives a notice from a mortgage lender saying, "I'm now your loan servicer, send me your mortgage payment." Well, that's fine. So you send the payment, and then your loan servicer calls you in 45 days and says they've never received your payment. Point is, you want to make sure that when you receive a loan transfer notice that you call or go online and verify that that institution does in fact have your mortgage and that is where you're sending your payments to. Final thing, everybody should be aware of, to some degree, to legislation that is called the Fair Housing Act. The Fair Housing Act of 1968 ensures that everybody has fair and equal access to housing without any hindrance. Fair Housing Act identifies 6 specific categories that cannot be discriminated against: race or color, religion, sex, national origin, person with disabilities, and family status. If you feel that you're being discriminated on in any of those categories for any reason, whether it's purchasing a home or renting a home, you can file a complaint. HUD, Department of Housing and Urban Development, does take those complaints very, very seriously. You simply go to hud.gov, www.hud.gov. When that page opens, at the bottom left is a tab, Quick Links. Open that tab and you will see discrimination complaint. Click here and you can register your complaint with HUD, and HUD will investigate it. So that's it. I hope you found this beneficial. I hope that you think about this, and when you are in the loan process, you can refer to this. But if I had to sum up what I would suggest any new homeowner do, is first, empower yourself with information, research. Second, be prepared. Once you have the information and you're prepared, then move forward confidently. Thank you very much and have a good day.